We're still watching the slow sinking of Chinese real estate giant Country Garden. The company is set to default on its loans if it does not make a $15 million coupon payment in the next half an hour, which also marks the end of its 30-day grace period. With nearly $17 billion of offshore bonds and loans, Country Garden defaulting would be one of China's biggest corporate debt restructurings ever. And of course, another Chinese real estate giant also struggling, Evergrande. That group faces a court hearing at the end of the month. They're potentially facing asset liquidation. Now, this comes after years of turmoil in the country's real estate sector, where overbuilding and excessive borrowing ran rampant. And Akiko, this is something that as we've been mentioning, this slow sort of crumbling here that we've been seeing. And a lot of people are still waiting for, the Chinese government to inject more support here. But with Country Garden especially, the first ever public dollar bond default, if it misses this payment here, and then China Evergrande. I mean, this is something that was considered unthinkable when you think of the size of these companies. And so if they don't hit that, when they have that hearing on October 30th, that key hearing there, that's involving about $327 billion of liabilities here, and has now cancelled creditor meetings. And it's really making people wonder, what does this mean then in terms of the financial stability in China and the government's ability to keep propping it up?
Well, I mean, it's a big concern when you consider that 1/3 of the Chinese economy is made up of the real estate sector, right? I mean, we keep saying that number, but it's worth repeating over and over because that points to the ripple effects that we are already seeing, but we are likely to see even further. You look at the IMF already downgrading the outlook for Chinese economy. We're looking at roughly 5% growth right now. You mentioned, what the government is likely to do. They've already taken incremental steps here in terms of cutting the existing mortgage rates, trying to reduce the amount of down payment that's necessary to instill that confidence, or reinstill, I should say, that confidence back in the real estate sector. But that simply hasn't happened. And when you look at Country Garden, we're talking $187 billion in liabilities. And the company has put out its own statement saying they don't know if they can meet this debt. So that's a big concern when you think about Country Garden traditionally being the more responsible player in the real estate sector. You mentioned Evergrande. They've already defaulted on their debt. Country Garden last week coming out and saying their property sales fell about 44% in the first 9 months of the year. So things certainly do not look good. The question is, will the same playbook that the Chinese government has instilled before, racking up further debt to really prop up the real estate sector, is that going to be enough? And you could argue a lot of China watchers increasingly say that's not going to work this time around. But it's a big reason why we're continuing to watch the story unfold.